Cheers to Monday retail trading team. This is Mastro coming to you live from Puppet Show Central with your routine briefing. Back on camera, this is the fourth time I'm recording this video due to technical issues. One would think that being a millennial, I would have figured this whole technology thing out by now, yet still work in progress it seems. The important thing is we're here now, we're excited, and we're ready to jump right into today's warm-up to see what we got going on. So I'm going to switch to the warm-up document over here. Make sure it works on the YouTube screen. Anticipation killing everyone, I'm sure. Great, it's working. All right, so let's jump right into this thing. Very much the same that what we saw of most of April, that neutral and balanced overnight inventory with a buy the dip, if you want to call that a dip, when we got that opening bell. So we do have that open drive, which is bullish today. So again, like we had Friday, you have that most convincing and highest probability one directional type of open, which means it's very unlikely that we see that 4184 trade again. I shouldn't say very unlikely. The probabilities are in favor of not revisiting it, is what I should say. That 4184 level that you can see in the bottom right-hand corner there. And then on top of that, we have that neutral profile again. That's that tight IBR. So as we kind of, let me see if we're still above 4200. As we try to kind of navigate 4200 here, these are going to be the levels I'm watching. And I will add more as the day goes on, and I will adjust the TPO appropriately as the day goes on. But really, we're back to that low volatility trading. In fact, this is the lowest volatility trading that we've seen in quite some time. And so it's just kind of about picking your battles. So the battle I got going on right now is just playing that simple breakout trade, nothing fancy. Just got that standard Fabio signal above that overnight high, and so we'll see if that holds. Again, 4200 to 4220 is really, I think, strong resistance, and I'm going to show you what I mean. So one little glance at the macro chart here, just because we always talk about it. We're really kind of nearing that major area of supply, and above that is kind of where you see that breakout toward that gap near that 422 area and the underside of that ascending trend line from the October 13th bottom. So macro today, not really too much. You're just kind of noting this supply zone that we have here. But really the best way to look at it, I think, is going to be on the TPO chart. So we have currently cut into it just a little bit. And I'm going to go ahead and just reduce that. So really from 4200 to 4220, 4219-ish, if you want to be specific, is going to be that strong supply. And then above that, we have one more decent supply zone from about 4230 to 4240. And then beyond that is when I think we have that significant breakout to that 4270 area. So perhaps we have continued breakout for the third day in a row. More than likely, we may see some fight around this 4200 area. What I'm really watching, though, is just kind of how we interact with that 4200 to 4220 zone. And I will play just the cards that are given to me. So yes, I do not think that this breakout trade, where'd my 10-minute chart go? I do not think that this breakout trade is the best trade in the world. Again, just following the signal, it's very possible that we get that fake break and push back in. That has kind of been the trend. As I mentioned on Friday, anybody who follows me on the Twitters, April was the worst month I have on record for my future strategy. It wasn't red, but it was green by a matter of hundreds once you take into account commissions. So really not a strong month for Fabio. And I'm working on some tweaks, obviously, to address it as we enter perhaps a new regime. But the win rate was about 1/3 normal. So definitely not the most friendly market conditions, even on a day like Friday that was ostensibly a trend day. And anybody on Twitter says it's a very clear trend day. I would ask them how they dealt with this 25 or so point stop run early in the day. I'm sure none of them got stopped out because that doesn't happen to people on Twitter. But for me, that kind of took me out of that breakout, and then I never got the additional breakout signal. In fact, I got a fake break signal that also got whacked later in the day. So yeah, just kind of that choppy trading. Thursday last week was a beautiful day. We usually get about 4 of those a month. We only got 1 of those in April, and so just kind of important to watch now. Do we get that sustained chop? Do the bears fight back at all, or do we just kind of keep drifting higher? Volatility implies that we may just keep drifting higher. As you can see, the /VX is in free fall. It looks like it's crashing and is down almost $4 from its high last week. So I don't have any other pretty lines to draw on this chart until we start to make some type of base. Right now, anything below 1920 is, as far as I'm concerned, a very significant downtrend. And if and when that changes, we'll go back to this chart. Yeah, really, it's not important to us as long as it continues to descend. And if you look at the volatility um, analysis that we've talked about in the past with the VIX, the various VIX levels. So let me just tell you those specific in the order. VIX 90, VIX 3M, VIX 6M, and VIX 1 year. So if you look at all those, the composite is they are all behaving themselves in a way that implies that volatility is stable, that the current level of complacency is not going anywhere. And that's also reflected, I think, in the SPX volatility for the FOMC on Wednesday. So we'll be watching volatility as the week progresses here, and as the month really progresses, we'll be looking for a change. But as of right now, the bulls are in complete control, and especially as this battle for 4,200 wages, it's going to be important to see if and when the bears do come in and fight it back. Until then, we got to assume that the trend is up. I'm just going to keep playing the signals that I get, which is right now a breakout signal, but I'm not trying to apply crystal ball here. We are in the dregs of volatility, so really anything can happen. The market is definitely primed for that rug pull, so anything that disrupts the status quo at all may very possibly lead to a significant down move. I'm not going to call it a flash crash, but we really are at the level of complacency where that is a possibility. I'm not trying doom and gloom and, hey, I'm long right now, so I'm not rooting for it at this particular point, but it's just something to be aware of, and one reason to kind of keep your risk, you know, tight as always, but maybe just a little tighter than normal, especially if you're selling options. So that's what I'm looking at in terms of just the raw price action. There's really not much to talk about. So I got the first video out here at 10:30. Like I said, this is the fourth. It seems that the technology is cooperating, and so we'll be back to a normally scheduled program tomorrow. Thank you for tuning in today. The newsletter is going to be out right after this. I'm going to push it out pretty quickly here, and I'll be on Twitter at Routine Trader if and when anything else develops during the day. I appreciate any engagement there via the newsletter or in the comment section of this video. So if you did enjoy today's content, I always appreciate that like. That helps with YouTube's algorithm. And in all cases, I thank you again for tuning in. I hope you have an excellent rest of your trading day, and stay classy until tomorrow.